So welcome to the podcast, Josh. This is First Street Soundcheck, and I'm Lucas Johnson with First Street Financial Advisors. I'm an investment advisor representative in Chesterfield and also Union, Missouri. And this is our second episode of the podcast. So welcome, Josh.
Thank you very much.
Good.
Very happy to be here.
Excellent.
Thanks for having me.
Excellent. I hear you had a good lunch today.
I did.
Where did you go?
Over across the street here in Creve Coeur at Potbelly.
Potbelly.
One of my favorite lunch spots.
Well, I went to McDonald's, so had 2 cheeseburger meal.
I'm doing better than you today.
I know. I'm probably going to die soon. So anyway, so welcome to First Street Soundcheck. Can you introduce yourself to the people that are listening today?
I can. Josh Sachs, lifelong banker, have been working in banking for nearly 20 years, started in 2007, working part-time while I was attending college at UMSL. Enjoyed the bank, enjoyed the customers, enjoyed what our business is all about, stuck with it, and here we are today.
Okay, so the clientele you deal with, is it more like commercial or is it more retail based at this point?
A little bit of both. Yeah.
Okay.
I work for a commercial bank based here in St. Louis, specifically at Westport.
Okay.
The bank has been built around mom and pop shops, small business owners,
Okay.
along with their employees, their managers, and some others.
Okay.
So most of what we do is help small business owners with their business and as well as their personal needs.
Awesome. Yeah, that's what we pretty much are trying to focus on with the practice nowadays is small business owners. So that's kind of, and of course on their personal end, like their personal wealth management as well. So we try to take the holistic picture of everything, interact with the bankers, interact with the marketing people, and everyone else to come up with a holistic picture. So that's what we're doing.
Sense.
Yeah. So I don't know if I've asked you, what is your favorite part of working with entrepreneurs? I don't think I asked you that actually.
I don't believe you have, but that's okay.
Yeah.
I really enjoy seeing people be successful. Having been at this a few years now, I've seen people start their business. I've seen the businesses grow. I've seen people doing well, having successful companies, businesses, growing with more employees, more locations, so on and so forth. And that's what I enjoy, I guess, the most is helping people, helping be a part of the business owner's success.
Okay, so from that standpoint, what is the minimum like size of business that you deal with and to the maximum?
I would say there's no minimum.
Okay.
I've worked with small business owners as
one person,
as little as one person who works for themselves who needs to buy a new truck.
Okay.
To I would for commercial bank, I would say the 10 million in revenue.
Oh,
give
wow.
or take.
Okay.
How
many
is probably the
employees?
range, and anything in between.
Okay.
Mhm.
Okay. Do you deal with a lot of medical professionals and people like that?
We do. Over the years, we've become very well connected with a number of doctors, physicians,
Okay.
chiropractors,
Okay.
dentists, and many medical professionals. Yes.
As my sister was talking, med spas. She kept bringing up med spa. She's like,
Okay.
med spa this, med spa that. I'm like, I don't know if that's really a doctor, but
Okay.
have you dealt with med spas?
I'm not sure if I have. No.
They inject a lot of, I guess she goes to a med spa. So,
Okay.
getting injections and stuff like that. From your seat, what do you think, what separates a successful business owner from kind of a struggling one? Sorry.
Sure.
Yeah.
I would say it's extremely important for them to have that vision. It's also important to have the patience that's required, especially getting started. Things can't all happen at once. However, at the same time as being patient, continuing to have that drive and be willing to grind and work every day, sometimes 7 days a week, and until things can come to fruition.
Yeah. So like the medical people, the dental people, since that's kind of what I'm dealing with at this point. Did you notice anything different with those people versus other entrepreneurs? And of course, we're talking about the entrepreneur side, not the hospital employees.
Sure.
So tell me like a story, or it can be anonymous, obviously, but kind of a general picture type thing.
Sure. In my experience, doctor clients are extremely busy throughout the day.
Mhm.
So, as their banker, being willing to be flexible as far as when we can meet, when we can talk, I often get emails from physicians at midnight or 2 a.m. or things
Are
when they're
you responding?
when not necessarily. However, that's when they're finally able to catch up on
Right,
their personal business.
right. So that's good. So commercial bank, that's kind of what your goal is, right? As a business,
It
since you're a
is.
representative commercial bank.
Correct. We're able to offer a much more tailored approach and solution than our larger, big box, if you will,
Yeah.
bank competitors. Looking at what the business owner truly needs, what makes sense for them as well as for the bank, as opposed to trying to pull an off the shelf product or
Mhm.
service like you might have at a larger institution.
And just to clarify, the name of the bank is Commercial Bank.
It is.
Because I don't want to confuse it. Some people think, oh, it's a commercial bank.
It is.
Commercial Bank.
Correct.
Okay. Let's write that down so I don't forget. No, I knew that. Okay. So, what are the trends as far as like professional service firms and interest rates? How is that affecting loans and stuff like that?
That's a great question. Interest rates have been a huge impact on the bank, on our customers, affects us from a competitive standpoint in recent years. We've come off of a nearly 20-year rate cycle of rates having been nearly at the rock bottom since the early 2000s when rates were reduced substantially. Then the 2008, they hit the rock bottom. Through that time, through 2017, give or take, remained at that level.
Right.
Things started to tick up, and then the COVID pandemic took place, back to the rock bottom again.
And you did help me on that, by the way. Thank you.
My
when you were
pleasure.
at a different bank with the PPP loan.
Yes.
Anyway, continue.
We did many of those.
Yes. And then after COVID?
Post-COVID, obviously rates have gone through the roof, if you will. They historically have never been increased in the way that they had been in 2022 to 2023, increasing over 500 basis points in less than an 18-month period.
Sorry to interrupt, but just so our audience knows, we know what basis points means. Can you describe that to the general public?
Absolutely. So rates went from 0% to 5.5%.
There we go. So
100 basis points is 1%, 1 percentage point.
Yeah, 1 percentage point.
So
500 is 5%.
Correct.
There we go. Okay.
So rates went from 0 to 5 or 5.5 in about a 15-month period, if I recall. Okay. Historically, that had never happened previously.
Right. Okay, so when these doctors are calling you at night or emailing you at night, what are their concerns? Obviously, it can be kind of a general concern, anonymous. You don't have to name people or anything. But what are their general concerns? You said MDs mostly, right?
We have MDs. We have surgeons. We have dentists. Yeah.
So what's mostly their concern, like at these midnight emails?
I don't know that it's necessarily a concern. It's more so questions, seeking advice on their next project, thinking about an expansion, thinking about a piece of equipment.
That's what we're going into next.
Read your mind.
Yeah. It's going to be financing growth. So, so they're basically talking to you about, not acquiring, but more equipment-based.
Sure. But to answer your earlier question about interest rates, what may have been an interest rate in the 3s and 4s 5 years ago, give or take, is now in the 7 to 8% range, especially for commercial small business loans. So what may have made sense, say for a building purchase, for example, what numbers may have made sense in the 4% interest rate range for $1 million building, let's say, ratchet that up to the mid 6s, 7%, the purchase may not make sense.
Right. And then I guess as a commercial banker at Commercial Bank, you would, I guess, look at the income flows or net income and things like that and go over it with them?
Exactly. The cash flow.
Okay. Cash flow is what you're looking at.
Yeah.
Okay. So my next question is, what should a dentist consider buying versus starting a practice from scratch?
That's a great question.
This is acquisition time.
Yes. So I would think first off, it would be personal preference.
Mhm.
If they would have the ability to go out and market and sell and build their book of business.
Mhm.
I'm not an expert at that.
Right.
However, I have seen people do it, and I've also seen individuals purchase another dental practice,
Okay.
and we've had the opportunity to help be a part of that.
Okay.
Those can be financed in
What
a
percentage?
number of different ways. If we're doing something in the bank,
Yeah.
it may be a larger percentage down,
No, I
and
meant interest rate. Sorry.
interest
Yeah.
rates. So I would give you a range currently
Yeah. Range. Just a range.
between 6% and 8%.
Okay. Now
Hmm.
that's to acquire the practice, not a real estate deal.
Correct.
So you'd separate those two out.
It could be.
Okay.
If we're looking at a practice that includes real estate,
Mhm.
we would typically carve out the value of the business
Okay.
per se from the value of the building,
Okay.
especially if there are other tenants
Okay.
in there as well if they don't occupy the entire space, because we would typically spread payments over the
Mhm.
building portion of the deal
Okay.
over a 20-year
20
period or
years.
up to 20 years.
Okay.
Whereas,
That's real estate.
correct.
Okay.
Whereas the practice,
Practice. Yep.
we would prefer that to be limited to a much lesser term, such as 5 years.
5 years.
Hmm.
Interesting. Okay. Okay. So let me give you a scenario. Okay. I'm just going to make this up
Hmm.
because this is a lot of people. My wife is an OB,
Hmm.
as you know, but she's hospital employed. So let's not go into that. But
Hmm.
she graduated from Kansas, University of Kansas. Medical school with about 200,000 in student loans
Hmm.
that were
As
outstanding.
as many medical professionals
Right.
do, right?
So now we're going to go into this. Let's
Hmm.
say she's a dentist instead. Let's say they have $200,000 in student debt.
Hmm.
They come to you, they're like, "Hi, Josh, how are you?"
Great.
Well, I just graduated from UMKC because they have a dental school there. I
Hmm.
just graduated from UMKC, and I have $250,000 in student loans. And also, I know of an old guy over here, a general
Hmm.
practitioner, a dentist,
Hmm.
and he wants $1 million for his practice. Now, he wants $1 million for his practice. I already talked to him.
Hmm.
With a big patient list, it's all good. He's 65 years old, let's say. And he's renting the space, so real estate's out.
Hmm.
What kind of metrics would you go by with that huge student loan? Like, would you even consider loaning them the money at all?
We would absolutely consider it.
Mhm.
The fact of a recent graduate as a DDS
Mhm.
would seem to have an extremely high likelihood of success and
Yeah.
a lot of runway in front of them, and we'd love to help be a part of that.
Okay.
So rather than the dollar amount of the student loans that are out there, it may
Yeah.
come down. That's going to be taken into account, but more so, it's what's the debt service requirement, what's the payment obligation
Right.
on that? Is it spread over 10 years? Is it 30 years? Is it $1,000 a month? Is it $5,000 a month?
Yeah.
That's going to be taken into account substantially.
Okay.
When we look at the acquisition of the practice itself, those
Mhm.
can be put together in many ways. One way that I've seen is the seller,
Mhm.
the retiring dentist in this
Yeah.
case, would carry back a portion of the amount that they receive,
Okay.
meaning, say the bank would finance, say 70% of the acquisition, and the retiring physician would be paid back his portion or her portion
Mhm.
over time, or after some number of years, it could be due and payable, or any combination. Um, I've seen it to where to get the lender comfortable with
Mhm.
it, with the deal, the retiring physician stays on,
Okay.
either as working or as a guarantor,
That's what they do in financial advisory
personally
too.
guaranteeing
Yeah.
the debt,
Yeah.
because they can be looked toward to help ensure the success of that business, the transition, and the ongoing. Another way to go about it would be through the Small Business Administration
Mhm.
um, with an SBA loan. Those payments for an acquisition such as that does not include real estate, we can amortize those over 10 years.
Now, explain amortization because I don't think the
Sure.
general public here might not know that.
Sure. A great comparison would be most folks who purchase a home or refinance their home.
Hmm.
Most common would be a 15 or a 30-year loan.
Okay.
All amortization means is how long those payments are spread over what term. So a 15-year mortgage, for example, is a 15-year amortization.
Okay.
That means after 15 years have passed,
Yeah.
all the principal is paid and the loan's gone.
Okay. So what seems kind of odd to me, and maybe the people who are watching this right now, is that you said the practice loan or note has to be paid off over 5 years. Is that
That-
correct?
It could be, yes.
So what if it's $1
Mhm.
million? So you're
Mhm.
saying that the person has to pay $200,000 a year?
That could be the case.
Okay.
Yeah. There's other ways to go about that too.
Hmm.
For example, depending, every credit is a little bit different. There's a lot of variables at play.
Yeah.
Sometimes that could be extended a little longer, maybe 6 years, 7 years.
Okay.
If collateral is added, for example, real estate or something to
Mhm.
help back it, maybe a securities portfolio, that
Okay.
could also be taken into account.
Okay. Just to clarify, securities to the audience are stocks and bonds.
Yes.
Yeah.
Additionally, through the SBA,
Small business.
Small Business Administration,
Mhm.
so a federal loan program, much like on the mortgage side, folks are able to do FHA
Mhm.
mortgage loans where they only put 3.5% down typically.
Okay.
On the small business space, small business owners, if they're eligible, can apply for and receive Small Business Administration loans through their local banker. But what the SBA does is offer the bank a guarantee against the
Mhm.
majority of the loan balance
Okay.
to where the bank has a comfort level or comfortability with doing a loan that they may not do otherwise without the SBA guarantee. For example, if in the bank we would not typically spread a small business loan that is not fully secured with what we call hard collateral, such as real estate or
Okay.
cash.
Okay. Not
Um,
stocks.
Could be stocks, yes. However, we wouldn't typically be comfortable spreading that over 10 years, let's say.
Okay.
But with the SBA guarantee, that limits our risk substantially by more than three-fourths of the risk typically, to where we can get comfortable with that.
Now I'm going to give you another scenario, and you don't have to answer it, obviously, but it's going to be a weird scenario.
Okay.
Let's say UMKC dentist has $250,000 in debt.
Mm-hmm.
Let's say their spouse works at Mercy as an employee, but they're a doctor too, and they have $250,000 in debt, and they have a mortgage that's I don't know, $800,000.
Okay.
And they said, okay, now we want to go to this guy and do $1 million loan on the dental practice. Now what?
A lot of it's going to depend
Is that too risky?
on not necessarily.
Really?
A lot of it's really going to depend on the cash flow and the
Of the old guy.
and of the old guy's business. Absolutely.
Okay.
So that small business loan is going to be reviewed and looked at independently as it will stand on its own and by itself.
Okay.
In addition, we do look at what we call global cash flow, which would
Never heard of that
include the things that you mentioned, such as the spouse's income,
Yep.
their mortgage, their
Mhm.
living expenses, those student loans. We combine all that together and figure out a global cash flow as well as what we call a global debt service coverage ratio.
Okay.
And what that means is a ratio being 1-to-1 for every dollar of income that you would have coming in. You'd have a dollar of debt payments going out, being principal and
Okay.
interest. So a 1-to-1 ratio means you're just breaking even. You have no cushion if there was a hiccup, if there's an unforeseen expense, so on and so forth.
Okay, so let's go into that kind of. So 250,000, let's say on both people. So that's
Mhm.
500,000. They have an $800,000 mortgage. That's 1.3.
Mhm.
Is that correct? Yeah, 1.3 million. The guy who is the old guy is $1 million dentist, right? So he has to make some huge amount of money. The old dentist, is that the idea?
What I would say is that
Like $500,000 or something.
the financials for the retiring dentist's practice would
Mhm.
absolutely need to be reviewed, several years worth of financial statements,
Yeah.
and ensure that. So for one, we're going to look at a business valuation,
Mhm.
and we'll be reviewing the overall sales,
Okay.
the cash flow, and the expenses for that business and come to an evaluation number to see, is the business truly worth $1 million to a potential buyer.
Okay, so the old dentist is not making stuff up. It's like, oh, I think it's worth this.
He likely has a number in
He
mind.
has a number in mind.
and there may be some science behind it, of course.
Or not.
Or maybe not. Yeah.
So as far as building, more valuable practice for the older guy, okay, what would you recommend to the older gentleman or gentlewoman to actually increase the value? So let's say it's a single location and this guy's been practicing there for 30, 35 years. If he was going to go to you and he says, Josh, I've been banking here at Commercial Bank for that entire time. I assume the bank's been in business that entire time.
We have.
Good. So he comes to you and he says, I want to sell my practice here in 5 years. What should I do to boost my valuation that we were talking about, the business valuation? Should I get more clients or patients? Do more procedures unnecessarily? No.
I understand.
Yeah. Like, how should I increase it?
Sure. I think it's all going to come down to cash flow and the net income at the end of the day.
Okay.
There are a number of methodologies that are used oftentimes when valuing or evaluating a small business to determine its worth or value.
Okay.
When we do a loan of that size, especially if it's SBA, it would typically require a third-party business evaluation where detailed financial statements are turned over to the experts who slice and dice those numbers.
Okay.
There are firms, third
who
parties
are the third party? Are they CPAs or something?
Along those lines, yes. Similar to like a real estate or equipment appraiser who would value various pieces of real estate or vehicles, equipment, things like that.
X-rays,
X-ray machines.
For this,
yeah. So they would take
Chairs.
into account the equipment, its age, but more so the value is in the cash flow and the value that the dentist has built being his book of business, his customers who keep coming back.
Okay, so if I were 65 and I said, well, I haven't really grown my practice that much, this is it, then you'd say, well, that's what the business is going to be worth. Sorry, or not sorry, but this is what it's worth.
I don't know that growth in the latter years necessarily is good, bad, or otherwise.
Okay,
but
interesting.
I would say what could have an impact, though, would be declining revenues, declining sales, declining net income. I think that if there's a downward trend, that could be a red flag.
That you would look at.
The lender would look at, the potential buyer's going to see it.
Now, as a lender, as far as that goes, you're representing, I guess, the buyer, and who would you represent as far as determining if they're supposed to buy the practice or not? Do you have a fiduciary duty?
No, I don't believe so. But our client would, I would be thinking, be the acquiring professional. Let's say
the buyer, the dentist is the young guy. Okay, and that's your client. And you're like, look, the practice is worth $1 million, but the old dentist wants $2 million. Then you would just advise against it, or to say you can't have the loan because you're just not going to qualify. Period.
Let's say, for example, that we're going to do an SBA loan and we can finance 90% of the business purchase with 10% cash down from
the young guy,
from the dentist.
Yeah.
If the business valuation indicates a value of $1 million, our loan can be $900,000. So if the individual wants to pay $2 million, then he needs to come up with $1.1 million in cash, and we can finance $900,000.
Okay,
that would be unlikely.
All right,
it would likely be that buyer and seller would continue to negotiate, and some facts and figures could be demonstrated and shown as to here's the why and the work papers behind it, or perhaps he needs to go look at something else.
Maybe. So let's say, I'm 40 years old. You're getting toward that age.
I am.
I think. And let's say we've been in practice now for, I don't know, when do you get out of dental school? 26? Yeah, something like that. So 15 years, something like that. And you decide, well, I want to scale my operations and maybe open another office. So maybe I have an office in Chesterfield and I want to do a branch office in Washington, Missouri, just to make more money, whatever. And I come to you and I say, hey, I want to open this new practice and hire associates. This is kind of the same methodology that you'd use as the buyout. You have your scaling.
Somewhat, yes.
Okay.
However, we're going to be reviewing your existing financials. How have things been going the last several years?
Okay.
And we're also going to be looking to you for projections. What revenue do you anticipate being able to generate? What income at the end of the day?
Okay.
What expenses are going to be incurred?
Okay.
Is this going to be upwards of $1 million build out between leasehold improvements and technology and electronics and equipment and everything that's required to get that up and running?
And I'll probably have to hire associates as well.
Correct. What's the payroll going to be?
A lot.
Or perhaps you'll be in one office 2 days a week and the other office 3 days a week, and maybe your payroll won't increase that much.
Now, how do you know that these payrolls? Who's doing these projections? Like, is it a firm, or you're just taking my word for it?
So we are taking the word of the business owner.
Okay.
However, we're reviewing them and we're also trying to evaluate as to whether or not they seem reasonable.
Now, I want to know, this is what I've always wanted to know, and I've never asked you this or anyone else. When someone turns in a loan for like $1 million or $2 million like this, do you have like a board that meets, like a committee, or are you just deciding?
That's a great question.
I want to know.
So
I don't know.
I have always worked for community banks where underwriting, decisioning, the entire loan process happens not only locally, but physically there in my office between myself and the guys that I work with. So unlike a larger bank competitor where information may be keyed into a computer or a program or a system, and somebody in Cincinnati or Louisville or New York or California who doesn't know you, doesn't know the local market, may be giving a green light or a red light, depending on the situation. So to answer your question, though, at Commercial Bank, for example, we have the ability to approve smaller loans with on a quick as needed basis. However, when it gets once we get into the larger scale, then yes, we have a committee.
How many people?
6 to 8.
Okay.
And we convene on a regular basis and review credit requests. And typically, though, we as lenders have a very thorough understanding of what the bank is going to be comfortable with prior to taking a loan to the committee. So, for example, if we think it's probably not going to be a good fit, then we would go a different direction.
You would tell me, hey, look, this is just not going to work.
Or we may not be able to do that, but here's another option we could try and work with.
Okay. Okay, that makes sense. And as far as exit preparation for the older dentist, let's say, what should that person do to get ready to sell their practice to this younger person? Or they could sell to private equity. I've seen a lot of those types of deals too coming up.
As have we. I had a longtime friend and customer who was a veterinarian. He, a few years ago, decided to sell out to private equity and was offered a lump sum, offered a full-time job essentially for the coming years, and also paid on the performance of the practice during that time, and then will receive another payout upon his retirement.
And let's tell the audience what exactly private equity, we both know what it is, but just to describe what private equity actually is.
So you may actually be able to describe it more easily or better than me.
Yeah.
What I can tell you is that at the beginning of the conversation, I mentioned that our bank is built around small business owners. Many of those customers over the years, whether it be physicians, veterinarians that I mentioned,
Mhm.
HVAC
Mhm.
contractors, and many things in between, have decided to hang it up, sell out, and there's nothing wrong with that.
Yeah.
But once that happens, they're really no longer a local bank customer.
Mhm.
Oftentimes, their firms are based in other cities, other
Yeah.
towns, without the local, let alone ownership, but local management and things.
Yeah, usually private equity, that's going to be accredited investors, which are worth, I think it's over $1 million excluding primary residence, or I think it's $300,000 if you're a couple for the next 2 years
Hmm.
income.
Okay.
And then you can put your money into a fund, kind of like a mutual fund, but it's all rich people. And then this fund invests in different stuff like HVAC or whatever,
Hmm.
dental and whatever. And then they buy this out and they want a
Sure.
return on investment higher than the
Hmm.
stock market. That's
Hmm.
what it is. So that's the back of the napkin way of describing what private equity is. It's a
Hmm.
lot harder to explain, but anyway. Okay, so as far as entrepreneurial leadership and team building, what leadership traits do you commonly see in these small business people?
I would say patience is one.
Hmm.
Um, Not everything can happen at one time, but also their ability to, uh, the emotional stability to make it through psychological blows when bad things happen, when people quit, when unforeseen circumstances take place.
Okay.
Resilience may be a better way to describe it.
Okay. Yeah. So, what challenges, like as organizations grow, as we were
Mhm.
talking about, like scaling and things like that? I don't know if you've seen many of those.
I've seen some. I would say what some business owners find is that bigger is not always better.
Oh, okay.
And not that it can't be in other scenarios too. However, I've seen some business owners who have expanded.
Mhm.
They have opened up multiple locations, they've hired more people, they've done more sales, done more marketing, so on and so forth. And they're making more sales. Their receipts are much higher,
Yeah.
but at the end of the day, at the end of the year, they're not making any more money.
Right.
So
That
how that
happens with financial advisors sometimes
hmm
too.
hmm
They grow so big that they have to keep hiring all these other associate
the,
advisors.
the overhead that's associated with all that
Eats
additional eats away at it, to
Mm-hmm.
where sometimes folks end up scaling back and scaling down,
Yeah. Or you
just to,
scale big.
to streamline, yeah.
Yeah. Or you
or
go real
or
big.
or there can be a no man's land, so to speak, in
Hmm.
between those two places.
I know a few financial advisors who are in no man's land, and I think they're not liking their lives right now. Lives right now.
I see.
But we won't go into who that is or etc. How many financial advisors do you work with, or do you work with any doing all these banking operations?
We have several financial advisor clients who do their banking business with us.
I mean, on these transactions and support, I bet none.
Uh, no, I can't
Yeah,
think of any.
yeah, that's like a new type of concept, like the
Okay.
holistic um,
Oh, okay.
ability. I
Mhm.
think because I was talking to a team at Kestra, that's my broker dealer,
Mhm.
Kestra Financial, and they actually have several CFPs, certified financial planners and lawyers, in the back office, and they're willing to take a dental practice or a medical practice and do the valuations,
Okay.
work with the bankers, things like that to come up with
Mhm.
a holistic picture, including the personal side and the business side.
Mhm.
So I thought that was really
I
interesting.
would say that'd be extremely valuable.
Yeah.
Mhm.
And I was like, ooh, wow, that's very, very valuable to the client if they,
Right.
have that kind of resource
Mhm.
for both. Cause, JD, that's going to be the contract part of it too,
Right. Right.
not just the financials. So, well, this one guy is like JD CFP. So
Okay.
he's like, I don't know. He's interesting. Anyway, moving along. So if you have a uncertain economic period, like we did at COVID, and let's say you're a dentist, how would you navigate that kind of situation, or maybe any small business owner?
Mhm. One of the things that becomes extremely important during those times, in my mind, is liquidity
Hmm.
or cash reserves, the ability to withstand financial uncertainty in that way. Where during COVID, if the dentist was not able to see patients during a period of time, if they had to close their office due to staffing,
Hmm.
are they able to? or do they have the wherewithal or the ability to pay for 3 to 6 months worth of
Is
expenses?
that your recommendation?
It's what I've seen. Yes.
3 to 6.
Mm-hmm.
Okay. 3 to 6 months of the entire office budget, right?
Operating expenses.
Operating
Yeah.
expenses.
Mm-hmm.
So that includes payroll.
Mm-hmm. I would say so. Rent.
Rent,
Yeah, or mortgage, utilities,
mortgage,
benefits.
everything.
Yeah.
Okay. As far as, let's say, dentists and medical professionals, as far as like the real estate part of that goes, let's circle back to that. You said 20 years. So let's say we're going to buy a practice, right? But we're going to buy the building also.
Sure.
Kind of describe to me how that works. What I'm kind of confused about, and I don't know if other people are going to be confused about, is you said the 5-year payoff period for the practice, but then you carve out the real estate for the 20 years.
Great question. I would say that in evaluating or looking at a sale or acquisition, depending on which side you're on, part of the value in the transaction overall is going to be in the underlying real estate, and part of the value is going to be in that business itself.
Okay.
So what is to keep that dentist from moving down the street into a newer, better, bigger, otherwise office building?
Okay.
And what, as opposed to staying where they're at currently.
Right.
So having the fact that of the building coming with it, certainly you would think would sweeten the deal. However, depending on the location, the condition, the age, are a lot of updates, repairs, ongoing maintenance required. Sometimes it may not necessarily be a value add.
Okay, so let's go back to like payments though. Okay, more concrete. So let's say the older dentist is selling for $1 million, and let's say the building's $1 million. Okay, so now we're going to take on $2 million in debt, correct? Well, minus down payment, whatever that would be.
Sure.
So we're going to have to pay off $200,000 on the practice per year for 5 years.
Could be.
And then the building, we're going to have to pay $1 million over 20 years, plus interest, obviously.
Yes.
Okay.
Like you said, it depends on what down payments amounts are required. But yes, if we're looking at a real estate loan and a small business loan, we do look at those, separately. Typically.
Oh, separately. Okay.
If, however, we are looking at the SBA, as I mentioned earlier, we can combine those two, and the amortization or the term of those loans or of the loan is based on what dollars were used for what exactly. So how much of the transaction overall was for the acquisition, the purchase of the real estate? How much was what was the value of the equipment, leasehold improvements? What is blue sky or goodwill?
Okay.
And we can talk about what that is, what that means.
So
the value of the book of business, the customer list, the name itself of the practice.
Okay.
Combine all that together, and typically a blended term is able to be done.
So the goodwill, last time I was actually talking to a marketing professor who's actually my sister. I already said that, so that's my disclosure. And we're talking about practice value like goodwill. And she was talking, what was really interesting, and I wanted to know if you had an opinion about this, or maybe you don't, that dental practices, modern ones, are going more toward naming, like my practice is First Street Financial Advisors versus Lucas Johnson Investment Advisor Representative.
Okay.
Because a lot of dentists used to be like, I don't know if you knew Jim Downard, but it was like Jim Downard, DDS.
Sure.
Versus Union, whatever, Union Dentistry.
Right.
Have you noticed any trends and things like that with the goodwill? Goodwill. I am German, but yeah. Goodwill.
I can't say that I have necessarily, but may not have necessarily noticed.
Okay. She was talking more
now that you say it though, it could make sense because
doing which one? The name or the fictional name?
The more fictional generic name. It all depends on what the goals are.
She was saying like if there's Josh Sachs DDS, and then you're gone, and then all of a sudden like Joe Smith DDS, they're like, who the heck is this?
Right.
And like the name doesn't carry over. That's what she was saying.
I understand.
And
That
it'd be
that makes sense.
almost less saleable too.
Right.
All
That
you'd be
makes
buying
sense.
is the book of business. You wouldn't really
Mhm.
be buying the goodwill as
Mhm.
much, I guess. So, yeah. So she was saying that as far as marketing goes, not so much financing.
I understand.
Who's valuing the goodwill? Marketing professors?
Not typically. However, as I mentioned, and as you mentioned, there are formulas and methodologies to value the value of those businesses and what portion is goodwill.
Okay.
Yeah.
All right. That makes sense. So let's now go to the personal wealth. Okay. Because that's part of my business also is the
Sure.
personal wealth side. As far as that's concerned, do you see many dental or medical professionals having side businesses at all? Because I know of some,
Okay.
like franchises and stuff like that, or rentals.
I have, yeah, especially several come to mind actually, who end up being sometimes active and sometimes less active investors or partners in other various ventures.
Okay.
Maybe it's a surgery center, maybe it's a completely unrelated medical business.
Okay.
It could be rental real estate or
Okay.
commercial real estate in some way.
Yep. Okay, so as far as rental, what's interesting about that is maybe they could buy the $1 million building, and maybe they can have tenants too to offset the loan that they're paying commercial bank or whatever bank.
Sure.
You know, do you see that very often?
Absolutely.
Yeah.
Yeah.
As far as the surgery centers go, when you say that, have you seen like dentists own the surgery center or more MD DOs?
MDs. Yeah.
And then do they go and do their surgery there, and then they also rent it out to other surgeons? Is that the idea?
I've seen that, yes.
Okay, that's kind of what they do. As far as rental properties go, because a lot of people love rentals. People in my industry, in the stocks industry, hate them because they don't make money off of them. But yeah, I'm just going to be real honest. But as far as rentals go, are you saying more commercial or residential?
Some of both.
Okay.
Yeah.
Like apartments, single family,
anything and everything.
Okay.
What I would say though is that as a professional, such as a physician or a dentist, I would be wary of the time management that goes along with owning investment property and engage a property manager.
How much time do you think? I think you might own some property, some rental property.
It depends on the property.
Yeah. How much time do you think you would consume with this?
It's hard to say. If things are going smoothly, maybe not much.
Do things go smoothly for you?
It depends. If there's issues and problems,
how about the tenants?
It depends.
Call you up. The bathroom doesn't work.
They can, and they will.
What happened with my mom actually at her office? You've been there in Union. The new landlord or landlady. What happened is they're redoing the upstairs. And they're redoing the bathroom, and all of a sudden she comes in and her entire back room, not her office part, but the back room where her files are from years and years, from the 70s and 80s and 90s, it's all wet, including the carpet.
Oh, wow.
Because it's these tiles, like up here, these ceiling tiles, and someone had just left it running, and it dripped down onto all these files. Yeah, and so it just like, they're not ruined, but they're kind of like mold destroyed type thing, and the carpet's kind of wrecked too.
That's a bad deal.
But that's kind of part of the, pain in the rear of real estate. Of course, she doesn't care because she cares, but she doesn't care as far as the building owner because she doesn't own anything.
Right. She's not responsible for the repairs, but she's left with, dealing with the effects.
The effects of the records being kind of destroyed or partially destroyed. Luckily, a lot of them are from like the 70s. So, that's beyond. A lot of those people might be dead. I don't know. Who knows? I don't know where they are. But I won't go into that. So as far as, let's say, return on investment for rentals, obviously I don't have to hold you to this, and I'm not going to comment on it. But I assume the return on investment, they want to make more money than the stock market. I guess that's the goal.
That could be the goal. Another strategy is sometimes from a tax standpoint, if they're able to depreciate the value of the building.
Okay.
And
can you go into what depreciation means?
Sure.
For the audience.
Depreciation is an expense that's able to reduce taxable income Let's say, for example, you purchase $100,000 property, just to make it simple,
Mhm.
and assume that's the value of the building, not including land.
Okay.
You're able to depreciate that over, I believe, 27 and a half years.
Okay.
And I believe commercial properties are a little bit longer, more like 39 years.
Okay.
So take 100,000 divided by 27 years. You're able to take that portion of the purchase price or the expense of purchasing the property and reduce. You're able to include that as an expense, which reduces the taxable income,
Okay.
which offsets the rental income that you receive, sometimes entirely, sometimes at
Yeah.
least partially, to where the net cash flow from that is not all taxable
Right.
income.
Because for these people, the MDs, DOs, DDS, medical mostly, they're going to have really high incomes if they're successful.
Correct.
Hundreds of thousands of dollars.
So their tax liability may become increasingly important or increasingly something to monitor and try to manage to the best of their ability.
Right. Yeah. So that's where the depreciation deduction would come into play.
Correct.
Right. So you can use it.
It could. Yeah. There are limits. There are.
That's more of a CPA type question.
It definitely is.
Yes.
Consult with a tax professional who can advise and have that discussion at a more detailed level.
Right. And then when they come to you and they say, "Hey, I want to do this," then do you go to their CPA, or does the CPA then present information, or are they just getting background and then they come to you?
We're more so looking at not necessarily a tax effect.
Okay.
We're more so looking at what's the expected cash flow for that property, as combined with what is the debt service that's going to be required on a mortgage payment, along with setting aside a little bit of a reserve for capital improvements for things such as when the air conditioner breaks or the roof needs replaced. Vacancy, when the property, as much as you'd like it to be, won't be occupied 100% of the time. Lost my train of thought. My apologies.
It's fine. So basically what we're going to do is we're going to go to the CPA first and ask them about the tax part. This is the step, the steps we could follow. Go to the CPA, ask them for tax advice,
Yeah, tell me what this looks like exactly.
Okay.
I'm going to buy this property, or I'm thinking about buying this property. What value does that bring?
For the tax.
What could that do for me?
And then after they receive the green light, they go to commercial bank, they go to Josh. They're like, "Hey, my CPA said this is a good idea. I make $500,000, whatever." And then you would go through your process then.
The only thing we're forgetting is perhaps speaking with a real estate professional.
I forgot about real estate agents.
Who would be able to indicate for them market rents, look at comparable sales.
But you want to get a good one.
Absolutely.
Because there are a lot of part-timers. So do you want to go with a commercial real estate agent or a residential real estate agent?
Depends on the type of property.
Let's say it's a single family home.
Typically it's going to be a residential realtor.
Okay. Okay. And how about an apartment complex?
That would be commercial, especially if it's, more than 6 units.
Because I would say some of those people cosplay, so to speak, and try to get a higher commission because they sell more, money. The money might be $10 million over here on the commercial end, and you see what I'm saying? And a single family would be $30,000, especially in St. Clair.
I can't speak as far as necessarily the
commissions. That's
the
what I'm
commission
talking about.
percentages.
Yeah, that would be a bigger win
versus what. Yeah,
and you would fake it till you make it type thing. And
I see.
And how would you pick these realtors? Would you ask you, for instance, for referral, or CPA, or me?
I would say yes, word of mouth from a trusted friend, colleague, family, something like that.
Because I noticed some realtors are either really part-time or they don't know what they're doing. I don't know if you've noticed that.
Like some financial advisors.
Some FAs are pretty... Some firms don't care about the training of their financial advisors. They don't, and I won't name them, but they're very prevalent around. Okay, we won't go into that.
Some bankers keep bankers hours.
Some
too.
bankers keep bankers. Some people, some FAs at the banks, who knows what they're doing. So let's go into how about franchises for medical professionals? Like if they want to own a McDonald's, I don't know, Domino's or something.
Sure.
Let's say they want to own Domino's.
Mm-hmm.
Did they come to you again and they say, "Hey, I want to own this Domino's"? Is kind of the process of the same thing?
They certainly could, yeah.
As far as franchises go?
Yes. So we would probably lean more toward an SBA a loan opportunity for that.
Okay.
Because oftentimes what we're going to be financing is licensing fees with the franchisor, build out of a leased space, equipment purchases, startup cash in order to fund the operation while it's getting up off the ground.
Okay.
And there's no... unless they have a lendable asset to pledge as collateral for the loan, like maybe they own some property free and clear, or they owe very little, we could look at that. But oftentimes we would lean more toward the SBA.
And what happens if it's Quiznos and they owned a Quiznos and you loaned it out and it went bankrupt? Is it like a
Quiznos
recourse?
Went bankrupt?
I think so. I don't know. Let's say a fast food chain, XYZ, went bankrupt. Do you have recourse as the bank against their assets? And recourse meaning you can, just for the audience, come after their personal assets to repay the loan.
Typically, yes.
Right. I think that's what recourse, that's what you would agree.
Typically small business, single owner operator, or
probably hire a manager for that.
Handful of people would be typically recourse loans where you where a personal guarantee of the owner or owners is required.
Right. So then, unfortunately, in that case, if their franchise went bad,
once we've exhausted the ability of seeking payment from the business itself, then we're going to look toward the owners.
Yeah. And so you're going to use collateral, meaning that they will have to show their personal assets to you, and then you'd say, okay, this is what
typically
you have to back up this loan. And if Quiznos or whatever goes bankrupt, well, we can come after your house. Or, I mean, this sounds really alarmist, by the way.
Every situation's different. But yes, and as a lender or as a banker, I am absolutely trained that we have to think of the worst case scenario and all the what ifs. So
correct.
What if the owner has what if he's not here with us tomorrow? What if he dies? Yeah. What if he gets hit by a bus? What if any number of
people stop ordering Quiznos sandwiches?
What if there's an unforeseen circumstance and his business has to close tomorrow? Where do we go from there?
Where do we go? And
and unlike private equity in the bank, things are looked at differently in that we're not lending our money, so to speak. We're lending our depositors money. Right. And when we're unable to collect our depositors' money back in the form of loan payments, then it's our money, because then we're writing a check.
Right.
It's our expense.
You still have to pay out. Yeah. It's like a two-way thing. Yeah, because it's financial intermediation, I think it's called. You bundle everyone's money together and you package it up and give out loans.
Something like that.
That's the simplistic way of looking at it.
A few steps in between.
That's the most simplistic way. Take all these people's money, package it up, send it out. They send you a check. That's really simplistic, so sorry about that. So that was my risk management question. As far as how many owners that are MDs, DDS, those people, how many, like percentage-wise, do you think go into separate businesses that you've seen? Like, is it 10%, 90%, 50%?
It's hard to say.
That you've seen.
I would say a number of them often do, however. Or they may be in stocks. They may invest heavily in stocks, bonds, mutual funds, real estate.
Yeah.
It depends on the individual.
Do you think more real estate than franchises?
I would say so, probably.
Because I think people go into franchises more to make a higher return.
They could, but often where there's the opportunity for a higher return, there's also higher risk.
Always.
So,
as
you're well aware.
As I'm well aware, I bet stocks go from 100 to 1 before, but it's primarily in high-risk industries. So, and I do not recommend those to my clients typically, but it's speculation, so
sure,
it is what it is. Okay, so we have about 5, 6 minutes remaining. Okay, what piece of advice, like final advice, would you give to an owner, maybe even a small business owner, as far as, starting out and building their business?
Mhm. I would say gain close relationships with a few handful of individuals that you
Mhm.
can get to know and trust,
Yeah.
such as a banker, not that I'm biased, a CPA, an
Yep.
accountant, financial advisor.
Hmm.
If you're looking at real estate, a trusted agent, an insurance broker or
Hmm.
agent. Um, go ahead.
Attorney. Don't forget
Absolutely. Yes.
that. My mom's an attorney, so
Bankers, attorneys, doctors,
just in
accountants.
case you have a heart attack because
Hmm.
you have a
Hmm.
recourse loan.
Right.
Yeah.
Right.
Got to go to the cardiologist now, get a stent.
Gain those
Get that
relationships,
relationship.
build on those, get in the right circle, um,
Yeah.
be able to bounce ideas off of other people that you know and trust, and get their thoughts and opinions.
So primarily as a banker over at Commercial Bank, who do you what other professionals, I call them allied professionals, do you
Mhm.
usually deal with? Because you said you don't deal with financial advisors, which I know why. It's because we are trained in sales, not in being financial planners. They always call themselves financial planners, but really they're salesmen.
Mhm.
And what firms are doing this. Of course, I won't
Mhm.
go into who they are, but I'll probably get sued for slander. But who do you normally deal with at Commercial Bank? Like lawyers and CPAs? Like who's calling you on the phone mostly?
As far as a referral partner, so
No,
to
as far
speak,
as when you're doing a process, going through the loan process, but
when
not recourse loans.
when we're
When you're
working
working on,
through the process,
mhm,
we're involved with a number of folks. Attorney is one.
mhm,
Sometimes an attorney is heavily involved, from uh, reviewing loan documents to preparing business entity documents,
yeah,
and everything in between. Sometimes they're not involved at all. The CPA is often, or sometimes, the one to help provide financial statements,
mhm,
tax returns, the documentation that's required, and they're able to answer any questions that the owner may not be able to answer himself.
yeah,
If sometimes a business owner is asked about certain facts, figures, dollars, and cents, they don't necessarily know. They'll say, "Call my accountant,"
okay.
and they're able to give us that insight as to what's needed.
That makes sense.
Hmm.
Yeah. Yeah. The thing about like holistic financial planning is a financial planner is supposed to be involved in every aspect. And I think the CPA's profession has tried to do that in a way,
Hmm.
but at the same time, they're more bean counters. My father's a CPA, for
Hmm.
instance, and he's always was looking at retrospective and not forward looking, really.
Sure.
What has happened in the past.
Hmm.
This happened in the past, but he was never like, oh, buy this stock or whatever, this is going to happen in the future.
Right.
You see what I'm saying?
And in the bank, we run into that as well. We are absolutely looking at historical financial statements, but what do those numbers really tell us? Where are things going from here?
Right.
In fact, we have some loan products that help us, and help the customer more so look forward, into what are your sales going to be tomorrow, next week, next month,
Hmm.
as opposed to looking in the rearview mirror about, as to what may or may not have taken place in the past.
Okay. Yeah.
Hmm.
Now, in your entire banking career, which you've worked at a number of banks,
Hmm.
I think, and I know of them,
Hmm.
I won't go into what they are, but Commercial Bank is your bank right now. What is the best, not case, but best, I guess, outcome from like ownership of a business? Have you seen someone build it from nothing, like something from nothing kind of thing?
I have,
And you
absolutely.
don't have to name them, obviously.
Sure. Um, I've seen many examples, many business types, from construction to insurance to manufacturing, and many others. It'd
Hmm.
be hard to name,
That went from,
hard to name them all.
and with
Um,
your help, they,
with my help, we've absolutely expanded. We've grown. We've acquired real estate. We have helped in a time of need. I think of one example, that a small business owner got themselves into a really difficult obligation to meet a contract,
mhm,
where they were ending up losing a substantial amount of money.
mhm.
We stood beside them and helped them get through.
Good.
And today they're still a viable, profitable business. But there was a time that they needed our help, and we were there.
Okay, good. So we have 1 minute remaining here, and I want you to once again tell the audience where they can find you and how to contact you. This will be on the internet forever, by the way. But
Scary to think about.
At this time, where can somebody find Josh Sachs?
Excellent question. Please feel free to reach out to me. I work for Commercial Bank. My office is located in Maryland Heights near Westport Plaza. My cell phone number, 636-328-3297.
Okay.
My email, jsachs, S-A-C-H-S, at mycbstl.bank.
That sounds good. So reach out to Josh if you have any questions regarding small business loans and things like that. And also you work on the deposit side, or some other what people do.
That's absolutely a part of the relationship. When it's something
Don't
we
do
didn't
that, no.
really when we
That's my competitor.
right, something
Where
we
people invest their money.
didn't touch on today. When we're looking at small business loans, typically the bank not only prefers but often requires to have that small business deposit account or accounts, that relationship with the bank as well. So
I knew
we're able to take care of all of that.
I knew a financial advisor actually that worked with a bank, and he was the independent contractor somehow. I'm not sure how that happened. And he had encouraged people to take money out of the bank and put it in the stock market so he'd make more money. And he got fired, I think, eventually. But he was like a 1099. I'm not sure how that worked.
Okay.
Where he was an independent contractor.
I'm not sure.
So he didn't work in the bank. He had his own office, St. Louis County somewhere. I won't say who it is or what it is, but yeah. And then he got fired because he took all this money out of the deposits, put in the stock market. So once again, I'm Lucas Johnson, and my practice is First Street Financial Advisors. I work in St. Louis County. Also, I have an office in Union, Missouri. And you can find me online, or you can visit my LinkedIn. It's Lucas Johnson. And my phone is 636-266-3010, I think. If it's not, then it's not.
Last time you checked.
Last time I checked. And just to do one more thing for disclosure, I work for Kestra Financial. That's my broker-dealer and investment advisor. It's in Austin, Texas. So they want me to say that. And thank you for coming in today.
My pleasure. Thanks for having me.
Yeah, and taking all the time. So this is our second episode. And I hope for the third episode, it'll be just as successful as the first and second.
I hope so too. I'm sure it will.
Yep. We'll talk to you soon.
Thank you.
All right. Bye.